Hi and Assalamualaikum. My name is Nur Shaila Mustafa from the class of MBM2A for Finance 420 subject. I would like to give some introduction to our choices that we considered when picking companies to construct a 5-year trend analysis and comparative analysis based on liquidity activity, profitability and leverage. FCW Sdn Berhad and KHIND Sdn Berhad both are listed in Bursa Malaysia as publicly listed companies. They both have similar commercial natures in their business, which are household goods company in Malaysia. And third reason, because they had some strong financial management and high sustainability in their business for the past 10 years. These three factors are good enough for us to start with the analysis.
For the next class, I'm Siti Noaika Syakir binti Azmi. I'm going to present to you about fundamental information. For the first company is FWC Holding Berhad. FCW Holding Berhad is a Malaysian investment holding company that operates in various business sectors. This company was incorporated in Malaysia in 1994. They committed to maintaining good corporate governance practice, ensuring transparency, accountability, and responsible decision making. They aim to deliver high quality projects to meet the market demand and provide value to customers. This company engaged in the manufacturing and trading of industry fastener, including bolts, nuts, screws, and related products. These fasteners are essential components used in various industries such as automotive, construction, and engineering. FCW Holding Berhad also active in the metal stamping and fabrication business. They offer service related to metal stamping, precision machining, tools and die fabrication, and other metal fabrication process. FCW Holding Berhad actually as an investment holding company. This involves holding strategic investment in subsidiaries and associated companies across different sectors to diversify its business interests and generate potential returns. SWOT analysis. First, strengths. Diversified business. FCW Holding Berhad operates in multiple sectors, including property development, industry fastener, and metal stamping. Number 2, established market presence. This company has an established market presence in Malaysia. This can provide FCW Holding Berhad with brand recognition and customer loyalty, potentially leading to a competitive advantage in its target market. Number 3, manufacturing expertise. This company expertise in manufacturing industry fasteners and metal stamping can be a strength as it allows the company to control quality, costs, and production processes. This can lead to efficient operation and customer satisfaction. So number 2, weakness. Vulnerability to economic condition. FCW Holding Berhad is business segments such as property development may be susceptible to economic downturns and fluctuation in the real estate market. This can impact the company revenue and profitability. Number 2, limited geographic reach. This company operation will primarily focus on Malaysia. This limited geography reach may pose challenge in terms of expanding into new markets and diversifying its customer base. Number 3, opportunities. 1, vulnerability to economic condition, and number 2, limited geography reach. Number 4, threat. Competitive market. FCW Holding Berhad face competition from other players in its various sectors, including property developers and manufacturers of industry fasteners. Intense competition can impact market share, pricing power, and profitability. Regulatory and legal risks. Change in regulation or legal requirement related to property development, manufacturing, or other sectors where FCW Holding Berhad operates can pose risks and challenge to the company operation and compliance efforts. Okay, for the next company, KHIND Holding BERHAD. This company was founded in 1991 by Chen Qifa as a small shop in Kuala Lumpur, Malaysia. The company exports its product to over 60 countries worldwide, including markets in Asia, the Middle East, Africa, and Europe. KHIND has established a strong presence in Malaysia and has expanded its operation to other countries in Southern Asia and beyond. This company also recognized for its quality, reliability, and innovative product. The brand has gained a favorable reputation among consumers in Malaysia and internationally, and has manufacturing facilities in Malaysia equipped with advanced technology and machinery. KHIND also committed to sustainability and energy efficiency. The company emphasizes the development and promotion of eco-friendly products that are energy efficient and environmentally friendly. Okay, so analysis for KHIND Holding BERHAD. First, strength. Established brand, diverse product portfolio, market presence, manufacturing capabilities. 2. Weakness. Dependence on economic condition and intense competition. Number 3. Opportunities. Growing demand for energy, expansion into new market. And then number 4, traits. Technological advancement, price, regulatory compliance.
I will explain this part financial performance between FCW Holding BERHAD and KHIND Holding BERHAD. The first thing I will talk about is liquidity ratio. This topic, I will explain about current ratio and quick ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. Based on the graph, FCW Holding BERHAD had the higher ratio, which is in 2020. In 2022, FCW Holding BERHAD is once again able to pay short-term obligations. That means FCW Holding BERHAD has the ability to pay its short-term obligation using the current asset compared to KHIND Holding BERHAD. The quick ratio approach is assuming all existing assets as current liability coverage, which differs from the current ratio approach. A greater ratio indicates the company's ability to meet short-term obligation without relying on stocks or prepaid expenses. This means the greater the ratio, the better the company's liquidity and financial stability. On the other hand, the lower the ratio, the more likely the company may have difficulty paying its debts. The graph shows that FCW Holding BERHAD had stronger capacity to pay its debt from the past 5 years in 2018 until 2022 compared to KHIND Holding BERHAD, which has a weak ability to repay its debts. That means FCW Holding BERHAD able to turn their assets into cash and pay off their short-term obligation.
Hi and Assalamualaikum. My name is Siti Nurafifah Syabira binti Azmi. Okay. The next is I will explain about asset management ratio. This part, I will talk about inventory turnover, average collection period, fee asset turnover, and total asset turnover. Inventory turnover is a financial ratio that measures the efficiency of a company inventory management by assessing how quickly a company sells and replaces its inventory within a specific period. It indicated the number of time inventory is sold and replaced during a given time frame, typical area. Based on the table, a higher inventory turnover ratio generally suggests that FCW Holding BERHAD is selling its inventory quickly, which can be seen as a positive side of efficient operation and effective inventory management. Besides that, Net Holding BERHAD has a lower inventory turnover may indicate slower sale and or excess inventory, which can tie up capital and increase carrying costs. The average collection period, also known as the days sales outstanding. is a financial metric that measures the average number of days it takes for a company to collect payment from a customer after a sale is made. It provides insight into the effective of a company credit and collection policy and the efficient of its account receivable management. Based on the table, a lower average collection period indicates that FCW Holding BERHAD collect payment from a customer more quickly, suggesting effective credit and collection policy and efficient cash flow management. Besides that, a higher average collection period suggests that not holding BERHAD take a longer to collect payments, which may indicate potential issue with the creditworthiness of customer or effectiveness in the account receivable process. Fee asset turnover is a financial ratio that measures a company's ability to generate sales from its investment in fee assets. It assesses the efficiency with which a company utilizes its fee asset to generate revenue. Based on the table, a higher ratio suggests that not holding BERHAD is utilizing its fee asset more efficient to generate sales. This indicates the effective utilization and productivity of fee asset. And on the other hand, a lower ratio implies that FCW Holding BERHAD is generating less sales relative to the value of fee asset, which may indicate underutilization or inefficiency in the use of fee assets. Total asset turnover is a financial ratio that measures a company's ability to generate revenue from a total asset. It assesses how efficient a company utilizes its asset to generate sales and indicate the company's effectiveness in utilizing its resource to generate revenue. Based on the table, not holding BERHAD get a higher ratio indicating that the company is generating more sales relative to asset base, suggesting efficient asset utilization. Otherwise, FCW Holding BERHAD has a lower sales generation relative to the asset base and may indicate less efficient utilization of asset. Next is leverage ratio. This topic I will explain about debt ratio, term interest earned ratio, debt to equity ratio, and equity ratio. The debt ratio is a financial ratio that measures the extent of a company leverage. It is defined as the ratio that calculates the percentage of total assets that are financed by debts. Debt ratio indicates the amount of debt in the company financial structure. The higher the debt ratio, the higher the company risk. According to the table, the debt ratio for not holding BERHAD is higher compared to FCW Holding BERHAD. 2018 recorded a higher debt ratio, which is 52.13%. It means that not holding BERHAD has taken on a large amount of risk in a business. The term interest earned ratio, also known as the interest cover ratio, is a financial ratio that assesses a company's ability to cover interest expense with operating income. It indicates the company's capacity to meet interest payment obligation and serve as a measure of its financial stability and soft. Based on the table, FC Holding BERHAD has a higher ratio, indicate a great ability to meet interest obligation, suggesting a lower risk of defaulting on debt payments. On the other hand, not holding BERHAD get a lower ratio, implying a higher risk of not being able to cover interest costs with operating income. The term interest earned ratio should be considered alongside other financial ratio and meant to overtake a comprehensive analysis of a company's financial performance and risk profile. The equity ratio, also known as the equity to asset ratio or equity multiplier, is a financial ratio that measures the proportion of a company asset that are financed by shareholders' equity. It indicates the level of financial leverage of the extent to which a company assets are funded through equity contribution rather than debts. Based on the table, FCW Holding BERHAD get a higher equity ratio, indicate a large proportion of assets being financed by shareholder equity, which suggests a lower level of financial risk and dependency on debt financing. On the other hand, non-holding BERHAD get a lower equity ratio implies a higher level of financial leverage and a greater release on debt financing. Lastly, I will talk about profitability ratio. This topic I will explain net profit margin, return on asset, gross profit margin, and return on equity. Net profit margin is a crucial measure of a company financial performance and is often used by investor, analysts, and business owners to assess the company profitability, efficiency, and overall financial health. Based on the table, FCW Holding BERHAD getting a higher net profit margin generate indicates stronger profitability as the company is retaining a large portion of its ringgit as profit. However, it is important to consider the industry and compare the net profit margin with per or historical data to gain a more meaningful analysis. The return on asset is a profitability ratio that measures the net income produced by the total asset during a period by comparing net income to the average total asset. Based on the table, a higher ROA shows a company's ability to generate a profit from asset. The rising ROA of FCW Holding BERHAD suggests that they are doing an excellent job of growing profit with their investment, but the dropping ROA of non-holding BERHAD indicate they may have over-invested in assets that have failed to generate revenue growth. Gross profit margin is a essential metric for business as it provides insight into the efficiency and profitability of their cooperation. It is often used by investor, analysts, and business owners to evaluate a company's financial health, compare it with industry peers, and track its performance over time. Based on the table, non-holding BERHAD gained a higher gross profit margin generally indicate better profitable as non-holding BERHAD is generating more gross profit from each ringgit of sale that FCW Holding BERHAD. Return on equity is a financial ratio that measures company profitability in relation to the shareholder equity invested in the company. It indicates the return generated by the company for each unit of equity invested by shareholder. Return of equity is expressed as a percentage and provide insight into how effective a company utilizes shareholder capital to generate profit. A higher return of equity generally indicate better profitable and efficient in utilizing equity capability. Based on the table, FCW Holding BERHAD get a better profitability and efficient in utilizing equity capital than non-holding BERHAD.
Hi, Assalamualaikum. My name is Nur Al-Hanis bin Zulfaqar. Number matrix is 2022277406. Next, we will continue with comprehensive analysis. So, there is 4 ways to improve the current finance based on the calculated ratio. So, number 1 is liquidity ratio. Based on the 5-year trend on analysis on the current ratio and quick ratio, for FCW Holding BERHAD is higher compared to KHIND Holding BERHAD in the first 3 years of the analysis. This means FCW Holdings BERHAD is able to turn their asset into cash and pay off their short-term obligation. Meanwhile, KHIND Holding BERHAD has lower CR and QR when they need to formulate a way to improve their liquidity ratio in such that they may raise their liquidity ratios, including cutting operating costs and paying off liabilities. It is also advisable for KHIND Holding BERHAD to use long-term debt instead to fund and operate the company. Short-term ratios may be the cost that make the company to have slower current ratio. So in order to have better current ratio, removing short-term debt from the balance sheets helps the company in the long term. For the second one is asset management ratio. So As for the asset management ratio, FCW Berhad has higher ITO compared to KHIND Holding Berhad, suggesting that FCW Holding Berhad is efficient in how quickly a company sells and replaces its inventory within a specific period. Meanwhile, KHIND Holding Berhad has lower ITO, may indicate lower sales or excess inventory, which can tie up capital and increase carrying costs. The way KHIND Holding Berhad can overcome these issues is by improving demand forecasting to prevent overstocking or understocking. By analyzing historical sales data, market trends, and customer demand patterns, a company can optimize its inventory levels and align them with actual customer needs. Supplier management. Building strong relationships with suppliers can contribute to better inventory turnover. Negotiating favorable terms such as shorter lead times, lower minimum order quantities, or better pricing can help minimize stock holding requirement and improve inventory turnover. On the other hand, KHIND Holding Berhad has a higher ratio on their ACP compared to FCW Holding Berhad. The decline of ACP in FCW Holding Berhad might be attributed to a looser credit policy. As a result of providing more credit to customers, a weaker economy, or a reduction in collection efforts, FCW Holding Berhad can improve this by implementing shorter payment terms on customer and increasing collection efforts by increasing manpower and leveraging technology in the collection departments. Based on the graph FATO, KHIND Holding Berhad has a higher ratio compared to FCW Berhad. A lower ratio implies that the company is generating less sales relative to the value of its fixed asset, which may indicate under-utilization or inefficiency in the use of fixed assets. FCW Holding Berhad can improve this by asset utilizing, asset replacement, process improvement, and asset disposal. Besides that, KHIND Holding Berhad has a higher TATO compared to FCW Holding Berhad. FCW Holding Berhad has a lower sales generation relative to the asset base and may indicate less efficient utilization of assets. It can be improved by revenue growth, inventory management, capital efficiency, and continuous improvement. For the third one is leverage ratio. So both debt ratio and debt to equity ratio are high for KHIND Holding Berhad in this 5-year trends analysis. This demonstrates that FCW Holding Berhad made minimal profit but has expensive margins to cover. Explaining the high operational leverage ratio, FCW Holding Berhad's leverage ratio might be improving by boosting profitability, inventory control, and renegotiation by comparing equity to debt. Besides that, time interest in ratio and equity ratio are high for FCW Berhad in this 5-year trend analysis. This demonstrates that KHIND Holding Berhad made minimal profit but has expensive margins to cover. Explaining the high operational leverage ratio, KHIND Holding Berhad's leverage ratio might be improved by increasing earnings before interest and taxes, profitability improvement, capital structure optimization, and financial risk management. Next, for the last one, number 4 is profitability ratio. So, return on assets and return on equity or profitability ratio of FCW Holding Berhad has better outcome compared to KHIND Holding Berhad. KHIND Holding Berhad profitability ratio may be increased by lowering costs, boosting turnover, and boosting efficiency and productivity all at the same time. KHIND Holding Berhad can potentially enhance its profitable by pursuing more profitable clients and selling to them more frequently. Furthermore, KHIND Holding Berhad must reduce some high-cost expenditures that are not profitable for the firm and enhance their cost management without satisfying quality. So based on the graph, KHIND Holding Berhad has a higher gross profit margin compared to FCW Holding Berhad. So FCW Holding Berhad can be improved by pricing optimization, cost control and efficiency, supply management and regular competitive analysis. Besides that, net margin for KHIND Holding Berhad has better outcomes compared to FCW Holding Berhad. FCW Holding Berhad may be increased by evaluating pricing strategies and adjusting products or service price to maximize profit margin. So FCW Berhad can focus on improving gross profit margin by optimizing pricing, reducing direct costs and enhancing operational efficiency. Furthermore, KHIND Holding Berhad must monitor financial performance, review key metrics and track progress against targets. So next, for the conclusion, financial ratio analysis is a quantitative tool used by business managers to learn more about a company's profitability, liquidity, leverage and activity. By evaluating the data included in the firm's balance sheet, income statement and statement of cash flows, ratio analysis provide this information to the business manager. The information gleaned through financial ratio is useful to managers who love to make financial decisions for the company as well as to external parties such as investors who need to access the financial health of the company. Financial analysis is used to track company performance and make comparative judgment regarding company performance. Financial ratios are compared to determine whether a business is performing better or otherwise. For instance, comparing the return on assets between FCW Holding Berhad and KHIND Holding Berhad helps an analysis to identify which company is making the most efficient use of its assets. To sum up, the financial ratio analysis is needed and important in business. So that's all from us. Thank you, sir.